Hello, welcome to today's video. So we are going to be talking about how to draw a proper trend line. So in our last video, we talked about determination of market direction. That means how to identify the proper direction of the market in order for us to determine our bias. Okay, so the first thing we talked about is identification of key levels for market bias, and the second thing I said we can also use to look for our bias is trend line. But it is very, very important that we know everything about trend lines and how to properly draw them. Okay, so what is a trend line? If you understand market structure, a trend line is a line that guides a trend. Okay, just simply put, a line that guides any trend. Okay, and you know the market structure is divided into three ways of which the market moves: uptrend, downtrend, and sideways. So what is trending markets? Now what are those trending markets? We only have uptrends and downtrends. So if you have an uptrend, the line that guides an uptrend is called the trend line. If you have a downtrend, the line that guides the downtrend is called trend line. So first characteristic of a trend line must be in a trending market. So a trend line must follow a trend. You cannot draw a trend line in a ranging market because it is not a trending market. So a trend line must actually follow up a trend. For example, in an uptrend where you have series of what higher highs, right? Market is creating series of higher highs and higher lows, right, to the upside. Now, a line that guides this going up, the line that guides this series of higher highs and higher lows going up is called what? A trend line. Simply put, because what this is a trending market. Same thing with a downtrend when market is creating what series of what lower highs and lower low, right? So a trend, a line that guides this series of lower highs and lower lows going down is called what? The trend line. Beautiful. So it must actually be in a what? In a trend. Now there are several characteristics in drawing a trend line, proper trend line, right? Or characteristics that a trend line must have. Now a trend line should have at least two to three. Let me put that down. One of the characteristics of drawing a trend line. Let me put that down so you guys can see it clearly. At least two. Okay. Trend line should have at least two to three what valid touch points in a trend. Okay, touch points in a trend. For the trend line to be valid, you must have this two to three touch points before you consider using that particular trend line as a trend line itself. Okay, let me take this out. I'm going to draw it back. Take this out. Okay, I'm going to put this. So a trend line should have at least two to three valid touch points in a trend, right? Number two, it must be in a trend, and it should be identified in a trending market, right? You not just go and look for trend lines anywhere. It should be identified in a trend market, in a trending market. In a trending market. So either an uptrend or a downtrend, not a ranging market. So there should be a particular trend before you start looking in order to identify that trend line, right? In order to map out trend line. What other characteristics do we have? Um, a trend line should not cut two bodies, right? The bodies you use should not cut two bodies, right? A valid trend line. This is the way I draw my trend line. I told you guys most of the things I'll be teaching on this channel are what I use to trade. Okay, the rules I use for myself. Okay, so might be different from other traders, but I draw my trend lines majorly using the wicks of the candles. I can cut through the wicks of the candles, but I cannot cut through the body, right? Must not cut through a body. Should not, it must. For me, okay, it must not cut through the body of a candle. Okay, so I'm just setting out those rules so that you can have them and you follow them. So that when you're mapping out a trend line, you should follow them. Then at least when you have after like 5 to 6 touches, after 5 to 6 touch points on a trend line, after 5 to 6 touch points on a trend line, right? On the trend line, the trend line becomes weak. Okay, so a trend line should have at least 2 to 3 valid touch points in the trend. It must be identified in the trending market. It should not cut through a body of a candle. After 5 to 6 touch points on the trend line becomes weak. So you should be looking out for maybe breakouts, or you should be avoiding that particular trend line because it now becomes weak. Okay, and I think the last point, a trend line should be the touch points of the trend line. This is the way people don't really actually get it. A lot of people miss it here. Okay, very, you guys write these rules down. The touch points of the trend line should be from a swing. The touch point of a trend line, very important. There are certain rules you must follow. Should be identified from a swing point. Right, identified from a swing point. So these are the 5 major rules I use in mapping out my trend line. So after 5 to 6 touches on the trend line becomes weak. You should be looking out for breakouts, right? The touch point of a trend line should be identified from a swing point. You guys know what a swing point is. I've talked to you when you have markets creating this point. This is a swing high, this is a swing low, and a swing high. When you have a break of structure, right? Market creating a low, creating a high low, higher high, creating that break of structure. Continue the movement, create a new swing low, new swing high. So once there's a swing low and a swing high, it means there have been a valid break of structure. There have been a valid break of structure. These are the touch points you want to pick to map out your trend line, not the ones that did not actually create, right? Not the one that did not actually create a swing. That's why I said the touch point of a trend line should be identified from a swing point. So you can use, so the generality of what I want to teach, I'm not teaching trend line strategies. The generality of what I want to teach here is that you can use trend line to identify the direction of the market in order for you to catch proper trades, proper XMC setup. Okay, now for example, you have seen market creating 2 or 3 valid touch points on a particular trend line. This trend line can help you also with the proper direction of where this market wants to swing from, right? Wants to now move from. Then when you catch that, okay, the market is stopping from here, maybe after using what do we use the last time, your Fibonacci retracements to calculate the discount. Okay, let's say after using the Fibonacci retracement to calculate the discount point from this swing low to this swing high, and it's telling you that, oh, you can actually take sales below this level because the discount point, and this level is also maybe matching up with a zone of support that has been broken, with a zone of resistance that has been broken, that can now turn to support. And you are now seeing a touch on, you have seen one touch, two touch on a swing point trend line. It's now a added confirmation that there is high probability that this market can create what, a swing low from here and move up to create a swing high. Now this is where you want to catch the move. Why? You have seen lost three confluences. The first confluence is market created a low and made a high. Market is coming back and is pulling into at least the discount level where you can take buy from. The second, right, and I've tweeted that, the second confluence for your trade is that, oh, market is also heading to a resistant region that was broken, that can now serve as support to push price up. The third confluence now is the trend line confluence. Remember, yesterday we talked about, or the previous we talked about key levels, identifying strong zones of resistance and support where market has been bouncing off from. Now we're talking about trend lines. You can see adding these two or three together is giving a beautiful confluence that, oh, 50% level of retracement. What's the first one? A Fibonacci 50% level of retracement. Now we have identified a swing, and this swing point is where we are interested to catch a trade. Two, we have identified that, oh, there's also a zone where resistance always tend to turn resistant. This was a resistant push price down. Price broke off. We identified that in the previous video. If you're watching this video for the first time, you can just go to the previous video, then you know everything about identifying key levels. So this is a particular key level that market has broke out from the first time, broke out again the second time, broke out again the third time. It's a possibility this zone can also now serve as what, support to push price. That is the second confluence. The third confluence now is, oh, the first swing point happened here, the second swing point happened here, push price up. Now price is coming to this zone, and you have drawn your trend line, because you say your valid trend line should have at least 2 to 3 valid touch points, and your touch points now, the touch point of a trend line should be identified from a swing point. You have seen 2 swing points and you have mapped out your trend line. Now third confluence is market is coming down to this zone, corresponding to your trend line region and also corresponding to your resistance turn support region. 3 beautiful confluence that you can now take your trade for a buy at this region using the SMC setup. If this is found on a higher time frame, you can now go to lower time frame, and once you see a rejection candle off the trend line, off the this zone, you can now beautifully catch your trade to the upside. Because why? It is also found in a discount region where price can tend to buy from. Below the discount region, you can see this is the premium, this is the discount, so you can take any buys from this region. Isn't that beautiful? So this is how we use this trend line as confluence confirmation. Not that we trade, there are lots of the other strategies that you can start using to trade trend lines, trend line breakout and retest, but for this video we're just talking about how to use it as a confluence to determine market direction. Now if this is gotten on a higher time frame, let's say a daily, a weekly, a monthly time frame, you know that, oh, as market has bounced off this region and market has created this swing point, market will be moving all the way to the highs, to these previous highs, because market want to continue the bullish structure to create what, a new higher high. It means any other trade you'll be catching on smaller time frame will be for buys, because what, you have determined the direction of the market. You now know where this market is going to on higher time frame. It means you want to be catching what, buy setups till market creates what, a new higher high. Beautiful. Now we've gotten directional bias from this, so it's quite easy. It's quite easy. So let's go to the chart. I think I have a chart here so that we can map out a trend line, see how to identify a trend line using the charts. Okay, this is this is Euro USD chart, the daily time frame. Okay, there's a lot of trends here. You can see market was in a downtrend a little bit here, uptrend here, So first thing you want to do, you might want to start mapping out key levels, right? You might want to start marking out key levels, because now what are we looking for? We want to catch a beautiful SMC setup. But now we are new to this chart. We just opened the pair for the first time. You want to now go to higher time frames first to look for those. Do your time frame analysis. It means go to higher time frames, map out key levels on the monthly, on the weekly, on the daily, just like we did in the previous video. Then after that, look for trends. Map out trend lines that follow the swing. You can also catch trades there. If you look at this now, there's a particular trend line here that this market has been following. Now this is a swing point. Market was bullish from this low all the way to this high. Market made a swing point from this low. Now it's made all the way a swing point to this high. I think we might see that very clearly on the weekly time frame. Beautiful. You can see a low, a high. So let's go back to the day. So this is a particular swing point for this movement, right? It's a particular swing point, and market made this move just like what we see. This is now found on a higher time frame. You have a high, a low, market creating a higher high. So our trading range might be within this swing low all the way to this swing high, right? This is for the daily time frame. We have this swing all the way to this swing point. But now if you look at this very well, right, this might be a swing point on a higher time frame, but there are other on this trend. As market is tapping on the trend, it's creating other trends inside of it. Okay, so looking at this is just telling us the market is bullish, and market has been following a particular trend line all the way from this low, right? So if we go to lower time frames, say for example the 4 hours time frame, right? If you go to the 4 hour time frame, you'll be seeing these swing points, right? You can map out these swing points where market has been creating series of highs and high lows. Swing point here, swing low here, pushed up, created a break of structure all the way to this place, created another swing point, swing low, pushed up and created this break of structure all the way to the upside. So you can see on the 4 hour time frame, it's a new swing from here all the way to this region. Now you can see market is retracing, and while it's retracing, it's also creating a trend. Now if you go to the 1 hour time frame, you'll be able to look at this trend very well. You see that this is a bearish trend on the 1 hour time frame, but on the overall structure on higher time frames, the market is bullish. So why is market trending bearishly? It means market might be actually retracing back to a particular bullish swing point, maybe to get into lower regions of discount before market will push higher. But does it mean we cannot catch a trade? We can also catch a trade using trends to determine the direction, but with the overall direction of the market at the back of our minds, right? A lot of traders have been catching these moves because this is actually following a trend. So if you were to draw this trend line right here, okay, you use your trend line tool. Sometimes you can use the ray tool also. You pick from the highs. Like I said, I draw my trend line using the wicks of the candle, right? I use the wicks of the candle, not the body. I can break through a wick, but I cannot break through a body while drawing the trend line. So I want to mark swing highs, swing high points. When market creates a shift, this was where market created a shift of structure here. So I want to pick this, and this was the second touch where market made another low, high, and broke structure again. So I have first break, second break. I'll be looking for where market creates another break, market swing, created a third break. So I have 3 swing points. So it means I can actually draw my trend line. Why? I have my first break of structure. This was what even shifted market from this bullish trend here. The market structure shift at the 4th place, right? Then market made another swing point right here, made another swing point right here. So I can start drawing my trend line. I have these points also right here. I have this point also right here. So here you can see I've marked out 3 swing points, 3 break of structures to the downside. It means market is actually going down following a kind of bearish trend, and you can see very clearly. Now if you draw this trend line, it will look like something like this, connecting those touch, right? You have beautiful touches all the way down. You can see this trend line. Let me stop it here. You can see my trend line. I'm connecting the wicks of the candle. I can break through a wick of a candle in order to connect it with another wick of a candle, but I cannot, must not break through the body according to the rules, right? According to my trend line rules. Connecting this swing point, this swing point, this swing point, this one came out through, did not touch, this swing point, all the way to the downside. So you can see this is a beautiful bearish trend line, and this trend line can also guide you with an opportunity for a trade, giving you direction. Means once the market has bounced off this swing, this trend line, what's the direction of the market? Down. Bounce, what's the direction of the market? Down. Bounce up, trend. Okay, so now how many touches do we have on this particular trend line? We've seen the first touch here. Oh, should not have checked that. Okay, this is the first touch on the trend line. We had another touch here. We had a third touch on this trend line right at this region. Then this one came all through, did not make a touch. We have a fourth touch right here. So remember, our law says if we have at least 5 to 6 touches on the trend line is now becoming weak. We have had 4 touch on this trend line. The trend line pushed lower. Now market is still moving. There might be a 5th touch. After the 5th touch, we'll be not looking at this trend line as a strong trend line anymore. We'll be looking for a breakout. We'll be looking out for a breakout. But we do not just look out and say, oh, because it's the 5th touch, market has created the 5th or 6th touch, we now want to start taking buys. No, you look for other confluence. And what's the other confluence? You calculate, you check the overall swing, the bullish swing where this market is coming from, because this structure is bullish. The overall structure is bullish on the higher time frame. Then you check if market is actually ranging or retracing down into discount levels where market can start buying from, and that might cause the break of this structure. So if you go to the 4 hours time frame, you see market has created this swing point all the way to this low, from here, from this all the way here, right? So if we use our Fibonacci, because this is the swing low all the way to this swing high, if you go to daily time frame, you see it very clear. It means market created this low, there was a pullback, and all the way market swing to the upside, bullish structure. Now, but on the smaller time frame, market is retracing into levels. So the first thing we want to do, like I said, is to what? Map out, draw your Fibonacci to use your Fibonacci retracement tool to map out the discount regions. So you can see that market is still at a premium. So any touch on the trend line here pushing this price down is actually very, very valid, because we are not yet into a discount region where we want to start looking for buys, right? You can see it beautifully. So it means market can continue obeying this trend line, but should in case market falls any level between the discount region, market can disregard and break out from this trend. So you want to be paying attention to that. So for example, if you're I've been taking shots on maybe Euro USD and following this particular trend, enjoying the money, making the money, cashing out on this shot, you would want to look at the overall swing where this market pulled out from and swung up to the upside. Now if market is pulling to the 50% region discount levels, you want to be very, very careful, because buys can happen. And how do we know buys can happen? If you have marked out the 50%, what are other things to look out for? Look out for regions where market has been rejecting from. Now if you look at this, market actually rejected from this level, right? It means there was a rejection here, just like our previous video where we mapped out what's it called, yeah, there was a rejection here, all the way we had a rejection from this zone, right? Market pull up to this region and rejected. This is now on a daily, pull out to this region, and we saw the rejection before it break out. So market might be coming to retest this region for a buy continuation. How do we confirm this? We need to also check, look at the left hand side, maybe go to the weekly time frame to check if market has, if there is actually maybe a weekly resistance or a monthly support line across this level. Now if you look at this, market rejected all the way from this region also. This point was also a rejection for the market. It means if you want to draw a weekly rejection swing point now from this zone level, there was a rejection all the way to the left hand side. You can see market tapped into here, rejected all the way to this region. There was also rejection when it comes here, so I want to pull that up a little. Rejected. Look at all the rejections when market tapped into this level, rejected. We are tracing it back to look at the history of how market has been moving towards this level. Look at, trace it here again, rejected, rejection, rejection. Market has been bouncing off and on this level for years. For years. This is 1981, 80s, the 80s. Let's take this to the monthly time frame. This looks good. Wow. So you can see this is a monthly key level. This region is actually a monthly key level for years. This is 80s. This is 79. This is, oh my God, this is 1994. Euro USD has been rejecting. This is a valid, a very strong key level region that on a monthly time frame the price has been rejected, corresponding to the weekly time frame rejection, and price is getting closer to those regions even on the weekly time frame, right? It means there is high probability that market might tend to what reverse when coming into the 50% discount of this zone. Now we are now using 2 to 3 confluences to map out our change, what we are, how we're going to trade this market. That's beautiful to me. Why is this thing scattered? Let me take it out so see clearly. Okay. Okay. So you can see the confluence are very clear. We have a trend line that we're looking at, and a trend line, a breakout from this trend line is also a confirmation that the market wants to change in trend, of course. Now we have 50% discounts regions we are also looking at. We also have a key level where market has been rejecting off for years that we are also looking at. So this guides your direction in looking for SMC setups. That's just what I want to explain in this video. I hope you guys get it clear, right? That's just what I want to explain. Now, people who map out trend lines, you must mark out a trend line that has created a, before you pick its trend line point, touch point, there must be, the touch point should have created a break of structure. This touch point created a break of structure, not the one that did not actually break structure. It must create a break of structure, not the one that did not break structure. You can see this guy is not even it's not even part of this touch point, because when it pushed down there was no break of structure here. It didn't create a swing point. You can see when this one pushed up, pushed down, it created that swing point. It took out this previous low. Okay, beautiful. So it helps also as a determining factor in order for you to get your directional bias, basically on what higher time frames, basically on what higher time frames. You can see this beautiful trend line on the weekly time frame on this particular pair that the market has been trading with. Then immediately the trend got broken, market ranged for a while, because of course after you have I don't think I discussed that with you, after you have a long trend, a long downtrend, you kind of have a ranging market, then before you have a long uptrend again. So market has been ranging for a year, has been bearish on this particular pair for years, and after that market had to range, also created that ranging market for years. Then now market has been also in an uptrend. That's how market moves from those three structures: the uptrend, the downtrend, and the trending market. So that's for that on this. I don't want it to be too long, so guys, take down the notes and go on back test. Let me, where did I write all the stuffs? Where is it? Okay, take down this and go through your chart and back test on how to draw proper trend lines, how not to draw a trend line. Do not draw your trend lines like this. Don't avoid obstructing the body of the candle when drawing trend lines. When you draw a trend line, you have a swing point like this. say you have swing points like this, maybe something like this, and you now start drawing your trend lines like this, say like this on the chart, where you see a clearly body of a candle coming out from here, body. So you must not cut through the body of a candle. This now to draw a trend line, just because maybe you want to mark out, you want to force it to have two touches already, but you see market coming out like this and you're drawing your trend line like this. No, it means if this point has created a swing and this point, this is the new point, this is now the trend line. Okay guys, so and not this. Okay, so you want to practice this on different charts using different time frames to actually map out those trends. Okay, so that will be that for this video guys.